The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Tuesday night here in Asia, Tuesday morning in the good old USA. And a lot on deck today. A lot of announcements. We're going to go through those really quick, and we're also going to talk about some earnings stocks immediately. We're going to kind of defer to some of the global things in the last 30 minutes. But before the market opens and during the market opening, durable goods at 8:30, Redbook 8:55, S&P Case-Shiller Home Price Index 9 o'clock, consumer confidence 10 o'clock. We talked about the way the Michigan numbers sometimes are calculated by calling people like me that actually like to fill out surveys, and then they keep calling them back every month. So that's probably skewed. State Street Investor Confidence Index at 10 o'clock, and then we have a ton of earnings after the close. But before the opening, things of note, and I'm going to I had GoPro up here. Got some momentum stocks that are kind of taking it on the chin lately. We're going to talk about this and see that right now GoPro, again, non-earnings related right now, but breakdown below profiles. If you're trying to buy this thing, I think you could either pick it up a little bit lower or now wait for a migration above back into the fair auction above. So let's take a look at some stocks immediately that are pre-market here. One of them, DuPont. Here's the situation on DuPont. The weekly, it's a bellwether. Doesn't have a lot of mitigating circumstances here to go up or down in a larger, up or down way. So we're going to understand that the long-term inflection points that you have to be aware of to try to trade this thing, 67.88, 65.36 are the long-term inflection points. We're sitting right there, 67.88, and that's kind of cool because it coincides with our daily unfair highs here, 67.21. So that DMZ, if you will, is going to be support for that thing. And then down below, you got 65.36 and 65.08 as the DMZ on the bottom side. Right now, we're trading about 68 pre-market, it looks like, and I don't know if these announcements have come out yet on DuPont, but those are the numbers to be aware of, and that's kind of the way I'm looking at the landscape for DuPont right now. A couple other things. These are notable situations, large caps, and I like to trade listed stocks. Michael, can we turn the air up? Pfizer, again, household name, big component. Long-term inflection points, 28.56, 29.59. Again, if you're kind of trading earnings announcements, I'm a big fan of waiting for the announcement to come out and then kind of reacting instead of acting before then. So 28.29 unfair highs, 27.71 unfair lows on the daily, but that 28.29 coincides a dual time frame kind of matchup here, 28.56, 28.29. So again, that's the support area for DuPont, for Pfizer, excuse me. And again, the markets rallied significantly. I think we recovered over 2/3 of the ground we lost. I guess we're calling this a flash crash at this state. And the FOMC meetings for the next 2 days, I guess everything's back in order, and they're feeling like tapering off, and the discourse seemingly is somewhat the same before the flash crash happened. So you've got to. I mean, I'm a kind of a fan right now of maybe we might have another pullback here. We might kind of retest some waters down below, and I'm looking for stocks actually that are relatively weak. But these earnings announcement stocks are definitely worth looking at to try to do some plays around some of these inflection points. Here's the situation on Whirlpool. Again, these are household names. not good news. 153 already this morning pre-market. So let's take a look at what's going on here. We've actually gotten back down into the fair auction on the long term below 155.50. So again, that's to be looked at as resistance now, and well below, you've got support at 144. So if you're a long player, you've got 41 to 44 down here as an accumulation on Whirlpool. And again, these are earnings type plays, and they're not something that I put a lot of long-term value into, if you will. But there's a situation on Whirlpool if you're doing some day trading. So let's take a look at HOT, which is Hotel and Resorts. Don't know if they've come out with earnings yet. Pre-market trading 81.50 as of the close yesterday, I guess pre-market this morning. And here's the situation. 77.83 is the inflection point to pay attention to. I think you got to say uncle below there if we kind of have a sell-off here. And that's the way I'm looking at Starwood Hotel and Resorts. Here's another one that we're going to take a look at, COH, and that's Coach. And seemingly, let's see if this is real here. 28, yeah. I don't know if that's a real print there. I'm looking. Can't say anything about that now. If anybody's got any information on Coach, that'd be nice to get it. Inflection points 36.32 on Coach. Pretty thin profile down here. So as we look at thin profiles, my mantra on things like this is I look at them as what we call wall formations and profiles in general. Don't see a lot of conflicting information here either way, so there's not a lot of direction. Classical technical analysis standpoint, I kind of look at this as a continuation down, but breakouts above on a long-term basis, 36.32 on the upside, and down below 34.51, in my opinion, are to be bought or sold, and that's based on that profile being relatively thin. Let's take a look at a couple of other things here. After the close, let's just take a look at Facebook. The Teflon coated stock. Here we go. Again, Facebook obviously had a little pullback there, not a big pullback. But when we got back above the 72, let's just call it 73, then it's really started showing itself early as a relatively strong stock in a weak market. We reached some targets above 79, let's call it. We closed above, and now we're just kind of congregating above those unfair highs. So the good news is, if you're going to try to add to your position on Facebook, and let's just kind of drill down into the daily here, you've got some decent reasons there as support levels, if you will, with stops down below to kind of, hey, let's try to add to a winning position. But if we get back down below those weekly unfair highs, and especially below 78, the daily unfair highs, I think this is a time to possibly rest on this for accumulation, and you can possibly pick some battles a little bit lower, namely 72.65 again down below, coupled with that 72.97 now, which is a new weekly unfair low that we just keep climbing the ladder, and it's not the ladder of worry by any means for Facebook. Something else, Gilead, which is a couple of friends of mine really love this stock. They've been saying buy it for a while, and lo and behold, look at that. On the so-called flash crash, gave you a chance to buy there, stop out, and then pick another battle. Look how that worked out, 90.79, and now we're back off to the races. What is that in 2 weeks? Good gracious. 25% move up or 23% move up in 2 weeks. Hate to buy things like that, but I don't see a lot of reasons here to go short. We've got some earnings after the close today, so the inflection points to pay attention to on Gilead, 108, let's just call it 109, rounded off. And again, if you're playing this from a buy support type mechanism, I'm considering saying uncle on that type of trade below 109, and then you've really got nothing down here. So I don't know if this is even a short candidate. If we get down there, it's kind of a scary situation as far as shorting goes. But we do have some short-term profiles. Below 104.78 is going to be something where you could start thinking about a contra trade short and try to let this drift down into that magical whole number 100 if you're looking at something like that. But again, there's much better candidates, in my opinion, to short if you're looking to short something. Okay. Panera Bread, this is another notable coming out after the close. I personally, was trading this back in the early 2000s, like 2001, 2002. It just was on a tear. And, I based my opinion on that company by going into their stores and wasn't really trading that on technical analysis and did pretty well on Panera Bread. I mean, their model was to sell cheap bready products for a lot of money. And, that was a pretty good concept for a while. And I don't know if it's, still a bad concept. So anyway, we've got inflection points on Panera Bread to pay attention to on the daily. 171.62 up top, 160.68 down below. Those are the big intermediate levels, if you will, to pay attention to on Panera. On the weekly, we're obviously well above profiles. And as you can see, it was kind of okay to get long again and not okay to be short back in the first day of September. Closed above, came back. That's the powerful trade. Remember, close above, retrace back to the breakout level, top of the box, boom, off to the races. And then it's kind of like looking for support all the way up, looking for reasons to buy. So, again, you've had some of those reasons here, a little bit of a stop out on the volatile actions that happened a couple of weeks ago, back in the game. And now we're kind of in a fair auction again. Here's the short-term numbers on Panera. Short-term numbers 168.80 and 166.59. So, again, I think, waiting for the numbers to come out and trying to use some of those levels. And by the way, those levels are very easy to find on here, mousing over this grid on this scanner product. And I'm just going to kill all this, and you can find Panera Bread in here. In fact, I'll just show you how to do that. PNRA. Okay. It's actually not showing up right now, but I'm going to take a look at that and figure out why. I think we've got a couple little maintenance things going on pre-market here. All right, when we come back for about 5 minutes, we're going to cover some of the global things, and then we might bring on Eddie from just got back from Moscow. He's got a ton of interesting stories from there, and some of the looks on the ruble and some of the things going on with the oil industry as it relates to financial companies in Moscow. We'll be right back, folks. Hang in there.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back. We're going to take a look at a couple more stocks here. Some earnings before day's open, and just to kind of give some areas of significance that you may want to pay attention to as these things kind of move around. Freeport-McMoRan, again, kind of suffering with some of the things going on with some of the metals. Here's the inflection points to pay attention to with some earnings coming out. 30.71. We've obviously closed below there again, and this is something to pay attention to. Up top, 32.66. If we break stride and start moving up, Eddie's going to be with us hopefully after the next break, so we'll pick up some global trading concepts then. Again, taking a look at gold really quick as it relates to some of the mining type related stocks. Let me fill it up. Where the heck is it here? All right. We've kind of stayed away from gold after it kind of started closing back below 1241. That was disturbing to me for that to happen, but you got to say uncle and things like that. We kind of trailed it up from 1227. Now we're just kind of drifting a little bit lower, a little bit up this morning. But again, the inflection point, the maximum supply, the maximum support area on gold right now, in my opinion, 1218, and breakouts above 1241. So haven't reached it yet. We've reached a low of 1222. We've bounced back up to 1228. But again, these inflection points are pretty strong. I'm going to stick with my guns on this. And if we can catch a little bit of a bid here down here at 12.18, I might play around with this with not too much of an appetite for risk on that one because, when gold gives it up, it gives it up. So, again, I'm still looking at this a little bit from the long side here. Crude oil. Let's quickly talk about that. Actually, let's wait for Eddie on that. Let's just sit tight on that because he's got some decent perspective on that from coming back from Moscow. A couple other things that we want to take a look at pre-market. Obviously, this thing has just come unglued this morning, kind of like an Amazon event, if you will. Twitter trading about 42 and some change. So, here's the situation on Twitter. 47.34. Obviously, that's not even in play right now. 51.19. So, again, you can't foresee these things happening, and it's better, in my opinion. I know if you flip a coin, you trade earnings, you're going to be right 50% of the time as the statistical sample unfolds. But, some of these things can take you out in a body bag, and in my opinion, it's always been better to just kind of sit tight when some of these things come out and trade the reaction. We talk about that all the time. Here's the situation on the 240s. Nothing to key off of here. So until we get some new information, just like on Amazon, just like on IBM, that got drugged through the mud here recently. This is the 60-minute. We just don't have anything here. And if you were trading these things as they came out, we did have a little bit of a spike up. But, again, that's probably stop-oriented, if you will. Let's take a look at Amazon really quick. That's not the right symbol. AMZN. Here we go. Similar situation, just got taken out back and shot. But we've climbed up, and, we talked about using the inflection points. We haven't been able to use them, but these are the outer perimeters of kind of a buy-sell situation, sell red, buy green, trading 290 right within the middle of a fair auction. But the cool thing is the daily, we're trading 289.97 pre-market, a little bit higher than that, 290 and some change. So, again, you've closed below inflection points on the daily, on the weekly, and we've rallied back and are kind of playing around with, let's just see where we were at. Our lows were 284. We've kind of gotten back up this week so far into the 290 and a half general area. So we've closed below the powerful situation, retest the, where we broke down before. We talk about this type of trade all the time. And not a lot of bulls on Bezos out there right now, fundamentally speaking. Talking about the model needs to be relooked at from a profit standpoint, obviously. But technically speaking, the break below the close, the retest, not a bad situation to get involved with, in my opinion, considering that the market's rallied like a bat out of heck here. And you want to try to find things that are just showing their hand. Stick around, guys. We're going to come back, talk about a couple of stocks, hopefully talk to Eddie, get into some normal currencies and indices that we need to cover. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Thanks for coming back. And looks like we might miss Eddie today, but we'll pick him back up tomorrow. I'm sure he's having a heck of a time trying to get readjusted coming back from Moscow. So anyway, Panera Bread still hasn't come out. I just told you guys I love the concept. Let's take a nickel's worth of wheat and sell it for $6. Never could get over the powerful statement of that. Yeah, Panera Bread, cult following at this stage. All right. Let's take a look at some of the things we always take a look at, I guess to give a barometer of what's possibly going on here. Yen, again, I'm a big fan of trading this, but I'm a big fan of trading it at the right time. We opted out on trying to pick some longs up there for a long time, and we kind of got our heart broken a little bit when we finally came back down to support, had to get stopped out of some of that. And we talked about, this is our daily, we talked about this weekly situation, 105.44, picking our kind of Custer's last stance battle down here on the long side, giving ourselves a little room because it's a long-term trade, just like it's 101.33 down below. But retest that powerful trade we just talked about, like on Amazon on the opposite side, short side. But, these targets above 108.39, we've reached them, kind of coming off here. That's the breakout above on the end. It's kind of a do-nothing trade right now. And on the 240s, if you want to play this kind of trail up regulate game, you got 107.18 sitting down here. So again, it's either going to have to be breakout buy or pull back into some support areas here. So that's the situation on the yen. One of my favorite things to look at and trade. All right, euro really quick. Obviously, some things are being said. Oh my goodness. Is that real? Yeah. Okay. So, again, 240s short term kind of broke stride there, and we're looking a little okay to be long, not okay to be short on a short-term basis on the euro. And look at what happened here for that kind of move up. We got back down into this. We never closed below. This is our daily. Came off of these inflection points up above, 128.30 rounded off. Never got a close above there. Kind of had this gathering action above profiles and reached our new profile top here. That's going to be some takeout areas that you always have to pay attention to. And then we, came down here, never closed below. Remember, if we're going to sell breakdowns or buy breakouts, we want a close to happen most of the time and trade the retracement. That hasn't happened. And on the 240s, using this as kind of a guiding tool, when we started getting back above there, the short term, we wanted to stay away from the shorts until we got confirmation. So it was either be long and don't be short for the short term. What did I say there? So okay to be long, not okay to be short on the short term. So again, that's the situation on the euro. The dollar. If you're trading the dollar, there's nothing to key off of here on the daily or the weekly. This is kind of a sit tight and wait patiently for a decent support pullback on the dollar. And that support area, in my opinion right now, on the long term is 84.69 rounded off. On the short term, you've got 85.46. We've kind of already bounced off of there. We could kind of rattle around in this short-term fair auction, 85.88 up top, 85.46 down below. So those are the numbers on the dollar. We looked at gold. Again, I'm kind of staying away from gold until we hit, or if we hit 12.18 or break out above 12.41. Kind of a no trade in my book right now. A couple of indices we need to take a look at. The breadth had changed on the long-term basis. Friday's close on the weekly. So, trading the breadth on a long-term situation, we talked about breadth a lot here. We kind of changed tone around September 19th. That was basically the top of the market. The long-term breadth has changed to negative. Didn't have the long-term breadth change to positive until Friday's close, and we're up a little bit from Friday's close. We talked about, Custer's last stance being that 1255 area, current PSC, former unfair low. I was still a big fan that, if we can get a close below this area, we could start doing hopefully some technical damage and start having some retracements. That seemingly is not wanting to happen right now, so you have to stay away from the shorts until you get some conviction and confirmation. And hopefully breadth changing, because right now, and we got some really cool things going into this, by the way, this particular product you're seeing right now. I'll explain that later in the week when we have that up, but the breadth is positive across the board now, short-term 60, 240, daily especially, and that all-important weekly change has happened, so we just have to pay attention to that. I personally thought we were going to have some more, at least come down and retest some lower numbers there, but that, everything's fine now. Whatever we were worried about with the 10% correction seemingly got corrected in a matter of a week or two. So as traders, we don't try to make a lot of sense out of that. We just kind of go with it. If you try to outthink this marketplace, you know what can happen. So situation on the DAX, let's just kind of drill into that a little bit. A lot of guys out there trading the DAX. Not a big fan of this thing on the long side. Here's the situation on the 240s. Obviously, the U.S. indices are a lot stronger than this. 90.48 up top, 88.42 down below. Those are the inflection points to pay attention to. And I'm a seller of the DAX on resistance levels. And the weekly resistance level right now is 93. Let's just call it 93.06. And that coincides with 93.20 up top on the daily infrared. So that will be about the ripest thing to sell. But on the short term, you've got 90.48 sitting there and breakdowns below 88.42 on the DAX. All right. Let's just kind of re-look at the Bovespa. And I'm going to pull this up. The Brazil markets, man, what a wild ride. My God, what a crazy wild ride. Anyway, the short action, have to be patient here, 53,086 on the Bovespa. We're trading 52 and some change right now. So if you're looking to kind of reshort the Bovespa, you need to wait possibly for a move a little bit higher. Let's take a look at the Russell futures really quick. Some guys trade this. Again, the weaker instrument, the weaker index of the big four, the Dow, the S&Ps, the NASDAQ, the Russell. Maximum leverage around 1140 on the long term. And we're kind of in a weird area between above the daily unfair highs where it's okay to be long, not okay to be short, and the weekly situation where we're still below profile. So we want to kind of get some bearing here, get some closes below 1106 or some closes above the 1140 area on the Russell. So the Russell, sometimes you got to sit on the sidelines. In my opinion, this is one of those times that we get some better information on the Russell. 10-year. Again, I don't think there's, in my opinion, a better trade on the books right now than to just possibly look for areas to buy the treasuries. The market's rallied significantly, and the treasuries have basically, for lack of a better way of putting it, gone sideways. So what does that mean? That means that they're kind of sitting, possibly waiting for a market downturn if that happens, and then these things kind of try to race, in my opinion, higher. And you've got a lot of Fed speak out. I just think you got the leverage and the edge on your side of the fence on the long side on the treasuries right now. But folks, make sure you put your stops in. And where do you put those stops? On an intermediate basis, below 126.09. Okay. On a short-term basis, below 126. Let's just call it 127. Okay. Silver, just nothing to do there. It's just short-term 240s. You do have a little bit of a breakout. First hint of something happening good on the long side for silver, above 1726, but not really as it gravitates back to the mode here, the blue line, the PSC, if you will. It's a no trade right now. If you're accumulating silver on the long side, you got to put your stops below 1675. All right, that's the situation on silver. All right, a couple of other things I wanted to look at this morning. Let's look at BABA. Nothing to key off of on an intermediate. So the only way you can trade Alibaba is to use shorter term numbers, and those shorter term numbers are 94.33. Now, as we get close, let me see where we're at this morning pre-market. Okay, we're at 99.38 right now. As we get close to 100, remember, psychological big number, people's minds may overshoot it. And a lot of times when we get, I went to Florida a long time ago before the internet really got prevalent. And I went down there to trade, and it was either go to New York or go to Florida, right? Because, the watcher hadn't even come out back then. It was the SOS, just getting started, the small order execution system, where the market makers were basically getting juiced by a bunch of guys sitting at terminals and pecking on keyboards and just catching people asleep. But anyway, when I went down there, a guy taught me a lot of cool things about trading around the 100 magical area. So as we get near 100 on a stock, a lot of times, you'll be able to get a short-term ride above that. It'll satisfy all the needs of that, and then it'll kind of collapse. So, Alibaba's kind of getting in that neighborhood if you're doing short-term trading. I know there's no inflection points up there. It's just might want to just pay attention to the action around Alibaba as it gets near 100. I know the market's on kind of some highs right now, but that 100 magical area is kind of an interesting thing to day trade around sometimes, just based on the psychologies of the number 100. Crude oil, December contract. Let's take a look at this. Again, we went down below $80 yesterday, kind of got back above. I'm not a big fan of this thing bouncing, folks. I think we're going to do a massive flush and get some folks out of crude oil that have been kind of using this as a basing action down here to try to accumulate crude oil. There's no free lunch in these. Crude oil's sitting around 80, and we're kind of staying in a profile, and everything looks great, and the guy's going to get the cheerleader at the end of the movie. That doesn't work out like that very often. So a lot of times it'll do a flush. So be prepared for that. And if we do a flush and we can get back above the low end of this profiling and kind of close above, that's positive, actually. So, again, until that happens, it looks like we're kind of compressing down at 80, and we could see 70 before this thing's over with, or even lower, in my opinion. And we still haven't had that that complete dump and flood on the marketplace, which we may start hearing stories about soon. Okay. A couple of the stocks I wanted to look at. Let's just revisit IBM. Tom O'Brien was a big fan of this going down. I mean, that was, 35, 40 points ago. IBM's going to, in my opinion, fundamentally speaking, have to do some hard thinking about what their business model is and how far they've been left behind. And as you look at this action down here, this is the type of action for continuation. It's not that, hey, it doesn't want to be there. Let's get IBM back up. This is the kind of thing that sad, really. Could be considered sad, but they kind of get what they deserve. And they've tried to change the culture, and they're going to, I think a lot of people don't change till the pain is great. And I think that's what's going to happen to IBM in general there, folks. All right. Apple, before we go to the next break, let's just pull up the bellwether, biggest heavyweighted thing in the NASDAQ here. Talked about this recently. Okay to be long, not okay to be short. Standing by that. Pre-market trading 105.42, it looks like. Is that what that is? Let me see here. Hold on. No, 105.41. Okay. So the short-term numbers on Apple, the only way you could short this, in my opinion, is if we can get back down below 104.18. And, the market, the stock market, that is, the index, the NASDAQ and the S&Ps, getting back above that 1955 area on the S&Ps is pretty damning for the shorts. The market breadth has changed, and Apple's not a short candidate yet. Is it a long candidate? Well, you can buy it on the short term, put stops in, but again, we broke out above 102.38 and haven't looked back, and we don't have any new inflection points up here on the intermediate basis. So again, I can't buy it up here, but I can't short it here. So that's kind of the situation on Apple. Okay, as we go to break, I hope we can touch base with Eddie for 4 or 5 minutes. We'll be right back regardless. Get ready for the rest of the day. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back for the last 4 or 5 minutes here. I'm going to try to pick Eddie up tomorrow. So what I did on the scanners, I tried to pick out stocks that just weren't cooperating with this move up, as we've kind of looked at recently. Schlumberger, slob, as I used to call it, in the sitting in a trading desk type environment. Amazon, we already talked about. Here's the inflection points. It's kind of nice to be able to just get those really quick. Transocean. Obviously, some of these are oil-related stocks. Southwestern Energy Company, Target's in there, not looking that good. Murphy Oil, that's kind of been on my radar for a while. Coca-Cola, again, these are the kind of the dregs of the bounce up, if you will. Peabody Energy, BTU, love that symbol. IBM. I mean, there's a handful, literally. It's wild. Intel, not showing the best recovery situation. Newmont Mining, we kind of already covered that a little bit. Let's just look at Newmont Mining, NEM. So we kind of looked at that recently, and let's just take a look at it again. So, the power of the inflection points. Here we go, folks. 2371, and touched it that day to the tick. 2371 was the high that day. So again, what do you do with something like Newmont Mining now? It's in a lot of folks' portfolios, actually. You can't do anything with this. This is why I pulled it up. You can't short it. You can't go long. You need to have some new information up here, and we're just not having that right now on the daily or the weekly. So sometimes, again, if you've been long Newmont Mining, I hate to just say you should have done this, you should have done that. This is kind of a barometer right here, just for the future if you're considering using some of this information to kind of guide you forward. This, to me, close below, retest. Well, didn't want to be there. And this is a good primer on possibly how to save some points in something that you're trying to pick some bottoms or just trying to stay with a core holding in general. There's really zero reasons to be long this down here. So, again, that's just kind of picking that out off the scanner. And as I go back to the scanner, we want to take a look at a couple other ones. Coca-Cola, KO. Let's just take a look at that as we are using that same theory. Again, the cool thing is on Coca-Cola, you've had the close below. Now you're kind of getting back into a retest situation, which is cool. 4105, that unfurl on the weekly. And again, what it does for me is it provides a really black and white, concise, high risk reward scenario to try to leverage against on a long-term basis. Now, Coke's definitely come down, and that's earnings related and all that kind of jazz. But that weekly inflection point is a very powerful situation. Here's the daily, nothing to key off there. But again, the weekly, very nice setup, in my opinion, on Coca-Cola to possibly move even lower. And considering that the market, if it doesn't turn around, you've got not a riskless situation, but a very tempered risk situation, in my opinion, if this thing moves up, as the market, may or may not move up. But if the market turns down, you're picking out weak things to sell if a market turns south. Guys, thanks for joining us today. Pick it back up again tomorrow. Steve Rhodes next. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.